We've got audio, we've got video. Hopefully we keep both. For those tuning in on the replay, you can fast forward to the disclaimers. Everybody else, you guys know the drill. Invite people in here. Come on in, come on in. Let's see. We're going to discuss Nvidia, yesterday's report on Supermicro, a lot of which I've been talking about for months already. Hindenburg did an amazing job, way better than I did, but I was earlier. We're going to talk about that, as well as the impact on Dell and TSSI on this special edition of Stock Talk Live. If you didn't get notified of this live, it's because you haven't subscribed. I don't care if you subscribe or not. I do care if you give me that thumbs up for all the free research I give. No subscriptions, no sponsorships, no nothing. It's all free from the retired multimillionaire former Wall Street analyst who used to get paid by Jim Cramer, George Soros, and others for my stock picks. I was able to retire at 38 because of that, by God's grace, and now by God's grace I am giving back to society. That's what I'm doing here. So, just getting the final invites out. You guys get the invites out in the chat rooms, actually. You guys take care of that. I'm looking over some final notes that I've put together for this. So let me do my job and you guys do yours. Let's see how many we've got live here. It's not updating, so I'm going to get an update here, and then we're going to get started. All right. This is for those of you who do hit the subscribe button and get notified that I'm live. All right, we got 20 watching. That's a good enough start for this time of the day. But you guys share the live though. I still don't see you guys sharing the live out there. Here we go. All right. We're starting to see some sharing there. Okay, cool. Good enough. Well, it's not Friday, but it is Stock Talk Live, and it is Money Mark. Last night, we got earnings from Nvidia. This is my Twitter, by the way. You know, all this stuff, we're going to skip all this stuff. Just see me tomorrow at 2. My normal show, Fridays at 2, okay? But I will put this on the screen. Okay, here's your disclosure, your disclaimers. The following is not a solicitation to buy, sell, otherwise transact any stock or derivatives, nor should be construed as endorsement of any particular investment. Opinion is Cox. Stocks current and future price could be clear. I do not encourage or recommend for anyone to follow my lead in any investment style or instrument, as I may enter, exit, or reverse positions at any time without notice, advance, or otherwise, regardless of the facts or perceived implications of the content. I am not a registered financial advisor, nor am I providing any recommendations. Suffice to say, if you're watching this, that you acknowledge that you have read the rest of these disclaimers and that this is basically a clown show. It's a complete parody. Nothing that I say here is serious, and this content is for informational, educational, and entertainment purposes only. All right, good enough. There you go. So Nvidia last night came out with great earnings. Okay, just not great enough for the traders. Okay, in my opinion, there's a lot in there that was already baked in by Wall Street. You know, they beat expectations. I do think that the hope was that they would blow out expectations by even more, okay, which they obviously did not, because the stock is reacting with a slight downtick this morning. Not as bad as it was last night. It was down as much as 7-something%, now only down 3%. And as you can see, CNBC actually nailed this headline perfectly. By the way, if you have questions in the chat, now we've got the kind of numbers that we normally get. So welcome everybody to the show. You haven't missed much so far. If you like what I'm giving you, give me a thumbs up. Don't give me the thumbs up yet. Just wait and see if you like what I'm giving you, okay? It's always free. I'm a retired multimillionaire Wall Street analyst who used to get paid by guys like Jim Cramer and George Soros for my stock picks and my expertise and contacts in the technology industry at companies like Dell, by the way, where I do have contacts, in Asia where I do have contacts, etc., etc. So enough of that BS. That's who I am. You could put questions in the chat. I'm going to answer questions in the chat. The reason that I'm doing this live today is because I don't want tomorrow's live to be too long. So I want to give a special live today for this specific purpose. So let's get into it. Again, CNBC with a really good headline. I don't always agree with them, but it shows the problem of being priced for perfection. This goes back to the same chart that I've been showing you guys, slightly different in terms of colors and all that stuff, but it's basically the same chart that I've been showing you guys since last year. Back when the stock was way down here and people were talking BS about AMD is going to take share from Nvidia. No. It actually looks like Nvidia is taking share from AMD based on some of the reports I've been reading out in the field, okay, leading to some downgrades as far as that goes. Slight, but still, right? But then you saw Nvidia stock triple from those levels that I was talking about, maybe more so. Yeah, more than triple from those levels where I was telling people, don't listen to the shorts, don't listen to the bears, right? But it then gets to these levels where I said, this is too much. First of all, from a technical level, it got above the technical channel that we had drawn. That's technicals. I care more about fundamentals, and that's where these colored lines come in. If you follow my work, if you don't, you can go here, markohmstocks.wordpress.com, and read this first article. That's where you'll get the rules of what I do. Okay, all free also, but just so you understand what a risk-reward chart is, what these colored lines mean, I'm not going to explain it here. But suffice it to say, when you get up here, it means that the stock is fully priced. Okay, this top line represents, it's my representation of fair value, not overvaluation. Fair value, assuming the company is fully executing. And yes, Nvidia is fully executing, and yes, as a result, it is at fair value up here at this line. But from here, I don't see its ability to go further up above this line because this line has a long-term compounded growth rate of 20%. I don't see Nvidia's long-term ability to grow long-term at greater than 20% at full execution ability, okay? Which it might have, like last quarter, full guns, it was a 10, out of 10 in terms of how good the quarter was. This quarter, great, but not considered to be a 10 out of 10, right? So you see it's just slightly off of what I would consider fully executing line, all right? So in conjunction with this report that we got out of Nvidia, we also got a report in the morning from Hindenburg, which does great research, by the way, okay, and talking about super micros, accounting manipulation, sibling dealings, that's nepotism, okay, the CEO's brothers have businesses that do business with super micro. That's not suspect. And even more importantly for us, okay, because I've been saying for months, Supermicro has been my #1 named short because I've been hearing from my contacts in the field that Dell and TSSI, actually largely because of the work that TSSI has been doing, eating Supermicro's lunch. But now we find out that it's not just because TSSI is doing a much better job than Supermicro, installing 500 servers at XAI at the same time that Supermicro was barely able to get one off the ground, okay? It's not just that Supermicro was slow. It's that Supermicro has major product issues, poor after-sales service, and mounting competition, which I've been talking about for months, okay, because of Dell and TSSI. You guys know, everybody knows already that Dell's come into the market. Everybody knows that they got half, 50% of the AI deal. What most people still don't know is that Dell's doing a way better job than Supermicro, and as a result, Supermicro is going to lose share at Elon Musk's companies. And that was already outlined here. Now remember, I was first to tell you about XAI, right? Thanks to Geo Investing, Maj Sweden, actually he's done great work on this. He was the one that introduced me to this company, so all kudos to him, right? But as I dug deeper, got evidence and proof that TSSI was increasing their employee count by as much as 3x, that they were doing work for XAI, but not only that, but also for Tesla. And a lot of people said, well, how's that possible? Tesla is a Supermicro account. Well, there we go. Was the exclusive supplier to Tesla. Okay? But May 24, during the second quarter, after I had started covering TSSI, after I started telling you that they were winning market share, after I told you that they are doing a better job than Supermicro and that they are getting kudos from Dell, kudos from Elon Musk, and as a result, TSSI is getting more business, tighter relationship with Dell, more business from Elon Musk's companies. Now we see Dell has won major deals from Tesla, eroding Supermicro's exclusivity. XAI, splitting business between the two companies. But what will the split be now? Is it going to be 50-50 when TSSI delivers 500 servers at the same time that Supermicro can only deliver 1? And when you go through this report, and I highly recommend it because you see the search that I did, just pull up the report and type in part 4, Roman numeral 4. And what you get there, hold on a sec, just double checking. By the way, how's my audio and video? Are we good? Let me know. All right. Just double checking that right now. I want to make sure that I got all the questions coming into the chat appropriately. Okay. I'm coming to you live from Moldova, by the way, which is northeast of Romania. So we're actually pretty close to the bordering country of Ukraine, right? If you don't know where that is. So we do have some questions coming in the chat. All right. So all this business is being taken away from Supermicro and being given to Dell. I would highly recommend reading this. I'm not going to read it for you now, but what I'll do next is do a search for Dell. And you'll see all the things going on, all the business shifting from Supermicro to Dell, largely because of TSSI, who nobody still knows about. All right, here we go. Nobody is better at building end-to-end systems for a very large scale for the enterprise than Dell. Well, who's doing the rack integration for Dell? TSSI. Okay, we got the late entrants, Dell, Lenovo. What have I told you? Dell, HP, and Lenovo. For months, I've been telling you that these three companies were going to wipe out Supermicro's market share. Not to zero, but from a very high number to a very small number. And now we're seeing that come to 4 in the marketplace. We're seeing that come to bear. All right, what else we got on Dell here? Dell, a deal from CoreWeave. That was a Supermicro account, and now CoreWeave moving a lot of that over to Dell. Okay, so we're seeing boom, 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 boom. All this. This is a Supermicro report, and it's all this talk of Dell. Okay, it's because Dell is the primary beneficiary for what's going on, and a big part of the reason is the execution that TSSI is giving them in terms of rack integration, and as a result, Dell is giving them more and more work to do, and that's why TSSI is now seeking a new facility where, now get this, they already gave guidance to growing their rack integration business by 10x. Watch my last videos for information on that. which is going to lead to their quarter coming up being approximately 3x top and bottom line from Q2. Q2 to Q3, not year over year, Q2 to Q3. From Q3 of last year to Q3 of this year, it's going to be like 6x. That's because Dell's giving them all this business, so much so, right, that all that business in the guidance for Q3 is being all done in the facility that they currently have, which they're now like full to the gills, right? 2.4 megawatt facility, 2.4. Listen to that carefully, 2.4. They want to find additional facilities. They're trying to expand into 24 megawatts worth of facilities. So let that sink in. 2.4 megawatts is sufficient, barely, to handle them having 10x'd their business from where it was a couple quarters ago to where it's going to be in the months ahead. Okay? Enough for that massive Q3 guidance. But on top of that, they want to go 10x from 2.4 to 24 megawatts. Okay? That's not going to 10x their business, by the way. More megawatts are needed as more powerful GPUs are created, but it's also not nothing. We're going from 2.4 to 24. That's probably the equivalent of, on a linear basis, going from 2.4 to like 10. It's still a 4x. That's going to occur over the next couple of years, potentially based on what they're looking for here. Okay? They said their immediate needs are 9 to 12 megawatts, not 2.4, because of all this. All right, let me check my notes here. Let's see what else we got. That's for tomorrow. I'm going to put this on the screen right now so you can read that yourself, because these are accounts that I haven't talked about. CoreWeave and DigitalOcean. Let me just go over my written notes, and we can answer any questions you got yet. Nvidia, strong quarter, but traders wanted more. The H200, by the way, people concerned about Blackwell, the H200 only started ramping in Q2. So Blackwell delays don't feel problematic to me. In fact, the problem that was described by Nvidia last night was with the mask. The mask is essentially a mold, right? So if you're going to create a product, right? Let's say you want to make a solid plastic ball. You get a mold and you pour plastic into it, and now boom, out comes a plastic ball out of the mold. That's how they make semiconductors. With a mask, it's effectively a mold, right? And they needed to, the mask was flawed. The original master mask was flawed, and they just needed to adjust it. It was not anything wrong with the actual design of the semiconductor. So that's great news, okay? So Blackwell shipments, as a result, are expected in the January quarter. So in other words, at early 25 at the very latest, based on what was said on the call, okay? That is an improvement over what I initially thought was told. It would be more like March with fears of June, and instead we're hearing no later than January from the company itself, okay? And demand continues to be incredible because CPUs can no longer do the job. Nobody wants CPUs. Everybody wants GPUs. So we're getting a complete replacement of $1 trillion worth of infrastructure. $1 trillion worth of CPU-based data centers are all being upgraded to GPU-based data centers. Now, once that upgrade cycle is complete, you're going to see a marked slowdown in Nvidia's business, but we're not close to that yet. And yes, there's going to be a slowdown in the growth rate of Nvidia's business because they've been going crazy since the beginning of last year. We're now in the middle of this year, so the comps, the comparables from last year to this year become tougher. Simple as that. Okay, Wall Street is lauding this quarter, saying it was a good quarter, saying that the price target remains higher than the current $120 that you see here in pre-market. So the company is still considered to be really healthy. Now, as it pertains to TSSI, let's go to the TSSI chart. There's your Nvidia chart. Okay, so be careful. It's fully priced. There's a lot of risk that if something goes wrong, the stock has a long way it can drop in this risk-reward chart. There's a little zoom in for you there. Okay, now if we go to TSSI, by the way, if you're just tuning in, give me that thumbs up and put any of your questions in the queue. There's the TSSI chart. You notice I haven't put any colored lines yet, but you see these bright white lines. These are preliminary risk-reward lines. These are lines that I expect to turn color at some point in the future. The gray lines here are technical. You could see that the stock can continue going up. It can double from here very easily, okay, to $10 by September 15th based on this channel, okay? And geo investing was first. I came out and validated this information, but looking for a $1 EPS run rate to be coming soon for this company. So if you get $1 of earnings, you tell me what PE ratio you want to put on that $1, and that's what the price should be. $10 only represents a 10 PE on a $1 EPS number. So if that comes to pass, then that's what the valuation looks like it ought to be. All right. I'm going to leave the chart on the screen while I take you through a little bit more information. So we went through the Supermicro report, right? I had talked about the report itself talks about poor customer satisfaction in terms of servicing the facilities that they put their servers into, poor customer service, etc. Well, TSSI has a facilities management business, okay? And I can actually pull this up on the screen for you guys, just so you can see that it is currently still a small business, okay? And as I write here, facilities management could explode due to Microsoft looking to do business with these guys. This is the thing. Who's going to want to do business with Supermicro now after this report comes out? All Dell needs to do is hand this report to any competitive bid and say, oh, by the way, while you're looking at the bids, also look at this when you're deciding who to do business with. And it's over. Okay? I would not be doing business with Supermicro under any circumstances personally, given what's in that report in terms of the failure rate of their servers, the poor customer service, etc., their inability to manage facilities properly, okay? Because the business wasn't built to do that. Dell's was. Dell was an enterprise business from the start, okay? I mean, going back decades, and Supermicro just hasn't been. So this is a big boon to TSSI because now Dell badly needs systems integration capabilities, rack integration capabilities, and that's why they gave money, okay? TSSI didn't say specifically Dell, but they said they received $1.7 million of free money from a customer last quarter. It was Dell, okay, to expand their capabilities. They were like, guys, expand your capabilities, and they're like, I don't know if we really need to expand yet. We're growing fast as it is. And they're like, Dell's like, we need it. We need the expansion. Here's money. Here's free money. Go expand, please. Because we need rack integration capabilities that you guys provide, the liquid cooling capabilities that you provide. Okay? And you can see here, you've got this facility revenue, right? Facilities management. And you see the gross margins on facilities, 70+% versus 43% for the integration business. So these carry higher margins, and now we're seeing this number getting ready to take off because of their ability to manage facilities in a manner that Supermicro cannot, as you can see from that report. Okay, so you got poor customer satisfaction. That's why Microsoft is looking to do business with TSSI. We got lost market share. That goes to Dell. That goes to TSSI. We got XAI and Tesla and Amazon all listed in this Supermicro report. Okay? I didn't do the search on Amazon. There you go. Failed relationship with Amazon. What did I tell you over the last couple weeks? Whether you believed it or not. My contacts were telling me before this report came out yesterday. I've been talking about this for months. Amazon is talking to TSSI, okay? Not a signed deal the last time I checked, but Sounds like this is going to happen, same as Microsoft, same as Tesla, same as XAI, right? And so there you go, Microsoft, Tesla, Amazon, XAI. Those are the existing things that I have heard about. What I haven't heard about is CoreWeave, DigitalOcean, NextGen, and Genesis, all of whom seem to be moving business over towards Dell. So it's that pipeline. When you hear from management that they're looking to expand from 2.4 megawatts to 24 megawatts, it's easy to see why. Because when we first started looking at this company, I first was looking at it and saying, well, looks like they're doing business with XAI. Period. Full stop. That's one deal. That's great and all. And what I told you was expect more, because they're not a partner with Dell to do business in just one of Dell's accounts. Dell doesn't have one customer. Dell's not going to continue to have one customer, and so TSSI won't continue to have one customer. And what happened after that? We heard about Tesla next. Then we heard about Microsoft and Amazon. And now we're hearing about all these other accounts that are moving over to Dell, and Dell giving money to TSSI to ramp up, and TSSI trying to ramp up from 2.4 megawatts to 24 megawatts. So what does it matter then at the end of the day if Blackwell is delayed a little bit when TSSI is just starting to build into what Dell is doing? Dell's business could probably shrink in half, and TSSI could still double into that on top of what they're going to give us on Q3. So that's beautiful. That's the kind of cushion that you want. That's where when you look at risk-reward lines like this, it's more attractive than risk-reward lines like this. Okay? And then, of course, Supermicro, never mind, because I told you guys that was a short. And look where that was from a risk-reward standpoint that I was looking at. Okay? I expect this company stock to come down, maybe down into this 100 range from back in the past. We shall see. Okay? But so far, from when I started telling you guys to short Supermicro, somewhere around here, we're up 55% on that short position. Due in no small part to yesterday's delayed 10K. Another sign that customers are going to hesitate on. The problems that they have with customers already are only going to get worse because now everybody's going to know about it. This report is going to make it known to everybody that Supermicro is in trouble and Dell is the beneficiary and TSSI is the beneficiary of that. So, by the way, I am scheduled to speak with the CEO today. I will give you an update tomorrow on that call. In the meantime, know that I spoke to the CFO this week, and greater investor relations coverage is coming. I believe an uplisting is coming, okay? And also executive interviews. So stay tuned for that. We may have management live on our show, as well as other shows like Breakout Investors, Geo Investing, etc., etc. They are now going to get aggressive about letting people know what they are doing in the marketplace now, what their role is, what is going on at Dell and Nvidia and Supermicro, and how their business is taking off because of it. Let's go to Q&A and then we'll call it a day. Facility management, high margins. Okay, I answered that question. Can I explain what facility management means and details? I have to get more, if you want details on what facility management is. It's maintenance, okay? So think about the facility, right? Once you build out the racks, once you deliver the racks to the facility installs the racks, gets the facility up and running, and now you've got all of these servers acting as one giant supercomputer. Well, there are going to be failures along the way. Some racks are going to go down. There might be power outages. There might be, for example, a flash memory module that busts. Okay? They need to quickly fix those problems to keep the supercomputer running at optimal efficiency. Okay? So that's the sort of thing that runs into the idea of facilities management. So I'll get more details from management as we go along. But to this point, I've been focusing on the integration piece because that's the piece that you see here that is multiplying in size, going from just 1 million a few quarters ago to an estimated double digits million. Let's say, it's 10 in here, 12 in here. That's not like a Wall Street forecast. That's me running numbers, figuring out how big this quarter is going to be. Okay, so don't take this to the bank yet, but this is the scale we're talking about. Whether it's 10, 12, or 17, it could go either way. I'm still researching and talking to contacts to figure out what this number is actually going to be, but it's going to be huge. It's not going to be 5 again. Okay, we're going from 1 to 5 to something much larger than 5 because they did this 5 off of 1 month. 1 month of, let me see if I can find some of what you found here that happened in May. See, boom, boom. Recent reports, May 24, post by Elon Musk show Dell is now one major deal, blah, 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 blah. Okay, so that just happened in May. In June, they started deploying. Okay, and that was 1 month of work that led to this number. What is 3 months going to bring? What is the next? That's a quarter. 3 months is a quarter. What's 2, 3, 4 quarters going to bring? With more and more customers. Okay, so that's the facilities management. No more questions in the queue. Okay, so I'm looking forward to speaking to the CEO today, but I wanted to give you that assessment of what's going on. Rest assured that slightly disappointing result from and you see here Nvidia already recovering to only down 2%. That's Wall Street buying from the traders. Okay, the traders out there that bought tons of call options, hoping for a big giant beat that would make the stock go up 20% and make their richest dreams come true. They sell those call options and that pressures the stock. And you see the stock actually heading towards green right now because the institutions, in my opinion, the institutions are buying based on what I read from the institution reports that came out overnight. Okay, so Nvidia actually had a great quarter. And you can see the traders getting out and the institutions scooping those shares up. You can see TSSI being the beneficiary of what's going on here. You see Dell actually up on the day, and Supermicro, I wouldn't be surprised to be bouncing back a little bit off of yesterday's drubbing. It actually recovered a little bit off of that low. That's short covering, by the way, folks. I took some profits off the table off of this giant pullback because, let's face it, I was tempted the day before. And I was like, you know what? I can't sell this because I think the stock is going into the 300s, if not the 200s. Well, what did it do? It actually got into the 300s. Okay? Nobody would have thought a few days earlier with the stock at 600 that it would get into the 300s, except I did. Okay? So, short the stock somewhere around 1,000, drops down to 3 something. You want to take some money off the table, wait for this gap fill a little bit, right? And somewhere up here, maybe the stock gets back into the 500s, maybe even 550, heaven forbid. I will be re-shorting those shares that I covered on that because I don't think we're done yet. I think this stock has further to fall. All it did was a kind of technical move just under 400. I think a move down to this level right here would be the next level of support at 371. And then it's a full drop down to the 200s. I think that's very doable here for this company that is in deep trouble at the hands of Dell and, of course, TSSI. So that's it, folks. I'll have more tomorrow, hopefully a full update from the CEO of TSSI. But hopefully that was helpful for you guys, and we'll catch you tomorrow. Take care. Is VRT a short? Yes. I still believe VRT is a short. I talk about that weekly. Go back to my last 2 videos and you'll see why, or tune in tomorrow at 2 p.m. Eastern Time and ask in the queue again and I'll answer the question in full. All right? Take care.